Hello and welcome to the Deep Dive.
Hi there.
Today we are really diving into a specific piece of analysis. It's from stocktelescope.com and it's dated June 7, 2025.
That's right. We're looking at their investment thesis and strategic analysis focused on D-Wave Quantum Inc. That's ticker QBTS on the NYSE. Pretty fascinating stuff, actually.
Definitely. And our goal here, our mission for this deep dive is really just to unpack this specific report from stocktelescope.com. We want to pull out the key insights they presented and, help you get a clearer picture of their perspective as of that date.
Okay, but before we go any further, we have to be absolutely crystal clear on something super important.
Yes, please.
This deep dive, it's based entirely and only on the source material we were provided, which is this one analysis from stocktelescope.com. This is purely for informational purposes.
Exactly. Think of us as guides walking you through their perspective from that specific report. This is not investment advice. Let me repeat that. Not investment advice, not financial advice, not in any way, shape, or form.
And, the report itself hammers this home. It includes a very, very prominent warning right up front. It clearly states D-Wave is a highly speculative investment.
Yeah, they don't mince words there at all. The analysis explicitly flags extreme volatility and the potential for significant loss.
Absolutely. Even the recommendation they eventually make, which, spoiler, we'll get to, comes with some really strict conditions. The report strongly advises that anyone even thinking about this needs to do their own deep dive, their own due diligence, and critically talk to licensed financial advisors.
Right. So please keep that high-risk warning from the source firmly in mind as we explore what they had to say.
Definitely.
Okay, so with that really crucial context set, let's jump in. How did stocktelescope.com actually frame D-Wave Quantum? What was their label for it?
They called it a high-risk quantum pioneer play.
High-risk quantum pioneer play. Okay, that phrase itself tells you quite a bit about their thinking. What exactly did they mean by that combination?
Well, the high-risk part is pretty self-explanatory, given the warnings we just covered. The quantum pioneer play aspect is where they see the potential upside. They view D-Wave as speculative, yes, absolutely, but also potentially transformative if this whole commercial quantum computing thing really takes off.
And what makes D-Wave the pioneer in the eyes of this source?
So the report points to D-Wave's unique position. They highlight that, according to their analysis, D-Wave was actually the world's first commercial supplier of quantum computers. They've been in this game for a while, which the source sees as a key advantage.
Okay.
And, significantly, they mentioned these recent quantum supremacy achievements. The source feels these really validate D-Wave's particular approach.
And this pioneering status, these perceived breakthroughs, this all offers exposure to a market the analysis thinks is, well, set to explode, right?
Exactly. The report cites projections, how these things go, but suggesting the quantum computing market could hit something like $7.08 billion by 2030. So D-Wave, being an early commercial player, is seen by this source as potentially grabbing a slice of that pie.
But let's circle back to that high-risk element. The source was pretty blunt about the valuation, weren't they?
Oh, absolutely blunt.
Yeah.
It's one of the very first risks they flag. The report notes that back then, June 7th, 2025, D-Wave was trading at what they call extreme valuations, somewhere in the range of 130 to 172 times its trailing 12 months revenue, TTM revenue.
Wow, 172 times revenue. I mean,
Yes.
that's stratospheric in almost any context. So what did the source say that implies for potential investors?
It implies, according to this report, that this is highly speculative and suitable only for a very specific kind of investor. They mentioned aggressive growth investors, people with a genuinely high tolerance for risk, and crucially, those with already well-diversified portfolios.
Right, and that emphasis on diversification and risk tolerance is key because, as the source stresses, any position size would need to be pretty small, reflecting that huge potential downside risk.
Exactly. The report is really clear on that. They state that the size of any potential investment in D-Wave, if you were considering it based on their analysis, would need to be strictly limited within your overall portfolio because of that extreme valuation and the inherent volatility.
Okay, let's dig into the numbers the source provided. What was the snapshot they offered as of that date, June 7, 2025?
All right, so the report lists the stock price at $18.62 on that day.
And the performance over the past year leading up to that, just almost unbelievable.
Yeah, eye-watering is a good word for it. Up over 11,154% in the prior 12 months.
Which, again, just highlights what the source was saying about extreme volatility, and they do mention potential bubble concerns later on.
Absolutely. It's a truly explosive move. The market cap on that date was reported at $5.44 billion.
Which ties right back into that 172x TTM revenue multiple we just talked about, that $5.4 billion market cap against their trailing revenue.
Right. It just shows, according to this analysis, how much future growth was already baked into that price. But on the other hand, the recent finance performance they highlighted was also quite strong.
You mean like the Q1 2025 revenue numbers?
Yes, exactly. The report notes record revenue for that quarter, $15.0 million. And that represented really significant growth, 509% year over year.
And their cash situation, did it look okay?
The source seemed to think it provided decent runway. They reported $304.3 million in cash. They also pointed to a growing customer base of over 133 companies at that time.
And on the tech side, the source mentioned their system size, over 5,000 qubits. Now, just quickly for anyone less familiar, qubits are like the basic building blocks for quantum computers, kind of analogous to bits in classical computers, but they can be 0, 1, or both at the same time, which is where the quantum power comes from.
That's a good quick explainer.
Yeah.
And yeah, the report calls D-Wave system the world's largest at that point. They see that size. Plus reliability, they mentioned, 99.9% uptime as key competitive edges.
Okay.
Now, let's talk about that quantum supremacy breakthrough that the source put a lot of weight on.
Right. This was something they cited from March 2025. What exactly did D-Wave achieve, according to this report?
So the analysis points to peer-reviewed research published in Science, which is obviously a top-tier journal. It demonstrated that D-Wave's system, called Advantage 2, was used to solve some really complex magnetic materials simulations.
And the comparison to traditional computers is what really made heads turn.
Absolutely. The report states that their quantum system solved these simulations in just minutes. And the comparison figure they use is that it would take the most powerful classical supercomputers nearly 1 million years to do the same calculation.
Okay, wait. 1 million years versus minutes. That's almost hard to wrap your head around. What's the significance here from the source's perspective?
This is where the source really leans into the idea of practical quantum advantage. Their argument is, look, this isn't just some abstract lab experiment hitting a theoretical benchmark. This shows D-Wave's system can solve actual real-world problems dramatically faster than even the best classical machines.
So it validates their specific technology approach.
Exactly. The report views this as strong validation for D-Wave's focus on quantum annealing. That's their specific type of quantum computing. And they believe it positions the company as a leader in pushing towards commercially viable quantum computing now, not just years down the road.
The source does mention, and it's important they included this, that apparently some academics disputed parts of these claims.
Yes, they do include that nuance, which is good. But ultimately, from the perspective of this specific analysis that we're unpacking, they view the achievement as a major validation of D-Wave's tech and its potential for practical use.
Okay. So moving beyond that specific breakthrough, let's look more broadly at D-Wave's tech and how the source saw their commercial traction building. What's their competitive edge, according to this analysis?
The report really emphasizes their leadership in quantum annealing. Now, that's one of the main approaches to building quantum computers, and it's particularly good for optimization problems. The source points out that D-Wave is the only commercial provider of these annealing systems.
Right. So while you hear a lot about IBM, Google, others focusing on gate-based quantum computing.
Correct. The source notes that difference. But they also highlight something interesting. D-Wave isn't only doing annealing anymore. According to the report, they're the only company building both annealing and gate model systems. Plus, they have those large, reliable systems we mentioned. And, crucially, over 20 years of experience dating back to 1999. The source sees that long history as a significant head start.
And what about the ecosystem around the hardware? It's not just selling boxes, is it?
No, not at all. The source talks about their Leap Quantum cloud service. That's how most users access the quantum power. The report said it was available in 39 countries, and users had already solved over 50 million problems on it. They also mentioned the Ocean software tools for developers, established partnerships with big names in manufacturing, finance, pharma, defense, and a growing developer community using their platform.
And I think what really resonates from the source's viewpoint is this idea that D-Wave delivers practical applications today.
Yes, this is absolutely central to their thesis. The report contrasts D-Wave, which they argue is providing immediate quantum advantage for certain problems, with competitors who might still be focused more on future, maybe more powerful, but not yet commercially ready, fault-tolerant systems.
Can you give us a couple of those specific real-world examples the source mentioned?
Sure. One they cited was Ford Otisson. They apparently used D-Wave's tech for vehicle scheduling optimization and cut the time needed from about 30 minutes down to under 5 minutes.
Wow, that's a concrete business improvement.
Right. Another example was Japan Tobacco, using it to help with drug discovery by identifying better molecular candidates than they could using just traditional methods.
These are tangible results showing that transition from research to actual application.
Exactly. And the report lists other optimization areas too. Logistics, broader scheduling challenges, financial modeling, material science. For the source, these aren't just cool science projects. They're actual business use cases driving commercial adoption right now.
And this commercial activity, combined with the tech milestones, feeds into this view of a massive market opportunity that the source lays out.
Oh yeah, they paint a picture of really explosive growth. The global quantum computing market projected to hit $7.08 billion by 2030. That's a compound annual growth rate, CAGR, of over 31%.
And the quantum as a service, or QCA, a part of the market accessing quantum via the cloud that's seen as even bigger, potentially.
Yeah, one metric they cited projected that segment reaching, get this, $48.3 billion by 2033, growing at about 35% CAGR. That really points to where the source sees the business model heading. And even just the U.S. market, projected to jump from maybe $0.8 billion in 2025 to $5.5 billion by 2034. Plus, the source notes that governments are pouring money in, like the U.S. National Quantum Initiative, which helps fuel all this.
So what are the key drivers, the catalysts the source identifies that could push this growth and potentially benefit D-Wave?
They list a few key ones. First, just accelerating commercial adoption companies moving beyond testing it out to actually using it in production. Yeah. Second, broader enterprise digital transformation trends the push for AI, efficiency, all that stuff amplified post-pandemic.
And government interest plays a role too.
Big time. Defense and national security spending is highlighted as a major catalyst. Governments want these capabilities, and the report mentions D-Waves is already working on what they call mission-critical applications. And lastly, hybrid quantum classical integration, basically. Quantum computers working with existing AI and classical systems. The source sees this combination expanding the potential uses for D-Wave.
And how does the source see D-Wave specifically positioned to kind of ride these waves, these catalysts, and market growth?
They really point to D-Wave's first-mover advantage, having that existing customer base and operational systems. They see D-Wave's technology as ready for deployment now, unlike maybe some competitors focusing on longer-term goals. The business model with QAS and system sales is viewed as scalable. And because their tech applies across many industries, they have broad coverage, which the report sees as a strength.
Okay, let's pivot now to the financial picture, as presented in the source, and then, really importantly, tackle the significant risks they detail.
Right. So the report highlights some positive financial momentum, especially in that Q1 2025 we touched on. The record $15 million revenue was obviously a big positive, though it was heavily boosted by a specific system sale.
And that system sale led to a really high gross margin, didn't it?
Extremely high. The report notes 92.5% gross margin for the quarter, reflecting just how profitable those system sales can be, alongside the growing QBTS revenue. They also point to an improved bottom line, a net loss of $5.4 million, which was actually a 69% improvement compared to the year before.
And the analysis mentions their cash burn rate was declining, which they see as pointing towards maybe profitability down the road.
Exactly. The report emphasizes this trajectory as being really crucial for the investment case. They also describe how D-Wave's business model is evolving, shifting away from relying so much on, say, professional services, towards a mix dominated by that high-margin QCS system sales, plus software and tools.
And the source expects that shift to continue.
Yeah, the analysis projects that within 5 years, QCS could potentially make up something like 90% of D-Wave's revenue. The source sees this as creating a much more stable, recurring, high-margin business model, kind of like successful software-as-a-service companies.
Okay. However, and the report is very, very clear about this rosy picture comes with some major counterweights, some really significant risks. It's not just a smooth ride-up.
No, definitely not. The source uses strong language here, basically putting up big flashing warning signs around the investment. They detail several key challenges and risks.
Starting with those valuation and market risks we touched on earlier.
Right. The absolute headline risk here is the extreme valuation, trading at 130 to 172 times revenue. Well, according to the source, that means the market was essentially pricing in perfection. There's very little room for error, leaving significant downside risk if things don't go exactly according to plan.
And they also mentioned market speculation, right? The hype factor.
Yes, the report warns that the general hype around quantum computing might be running ahead of the actual near-term commercial reality. That could lead to disappointment down the line. Linked to that is the volatility risk. I mean, that 1,154% gain in a year. While amazing for those who caught it, the source flags that as raising bubble concerns.
And anytime a company raises money, that can also introduce risk for existing shareholders.
It can, yeah. The source notes a potential dilution risk from a recent $175 million equity raise D-Wave did.
Yeah.
More shares outstanding can put pressure on the per-share value.
Okay, so beyond market stuff and valuation, what about risks related to the technology itself and the competition?
Well, the report acknowledges that technology debate we mentioned earlier, the fact that those quantum supremacy claims, even though published in Science, face some pushback or dispute from parts of the academic community.
And then there's the elephant in the room in any cutting-edge tech space, big tech competition.
Exactly. The source is very upfront about this. Giants like IBM, Google, Microsoft, they have vastly larger resources, huge R&D budgets they can pour into quantum computing. That poses a massive competitive threat to a smaller, more focused player like D-Wave.
What else did they list under this category?
Market timing is one. The broad commercial adoption of quantum computing might just take longer to really happen than some optimistic projections suggest. And also technical limitations. Annealing systems, which are D-Wave's specialty, are great for optimization, but aren't necessarily general-purpose computers like the gate-based systems others are building. That could potentially limit D-Wave's market for certain kinds of problems.
So pulling all those risks together, how does the source summarize their sort of critical risk assessment?
Their view really boils down to this. First, that sky-high valuation implies almost no margin for error. Second, the competition, especially from big tech, developing potentially more general-purpose gate-based systems, is a serious and ongoing threat. And third, there's just fundamental market development risk. The quantum market is still very young and might not grow as quickly or in the ways people currently expect.
The source does offer a few points that might mitigate these risks, although they still stress the risks are substantial.
Right, they list a few things. D-Wave's strong cash position gives them some runway to navigate challenges. Having an established customer base makes it easier and cheaper than finding entirely new clients from scratch. Having practical applications today helps reduce the risk that the tech just remains theoretical for years. And having a diversified portfolio of applications across different industries means they aren't totally reliant on just one sector taking off.
But again, the report frames these as mitigators, not eliminators of the significant risks involved.
Precisely. They temper the risks, but don't make them disappear.
So weighing everything, the pioneer status, the breakthroughs, the market potential, the financials, and these major risks, what was StockTelescope.com's bottom line investment recommendation and outlook, as stated in their report?
Okay, so their specific recommendation was, quote, speculative buy with strict risk management, end quote.
Speculative buy, okay, but with that really crucial qualifier, strict risk management. So what kind of strategy did the source suggest for someone who might consider this based on their analysis? And again, just to be clear, this is us reporting on their guidance, not offering our own.
Absolutely clear on that.
Yeah.
So they recommended a maximum position size of just 1% to 3% of someone's total investment portfolio. That's because of the extremely high volatility.
Tiny position size. Makes sense given the risk.
Yeah. For actually buying, they suggested strategies like dollar cost averaging, buying smaller amounts over time to average out the entry price, or maybe waiting for market pullbacks, specifically mentioning if the price dipped below $15 as a potential entry zone.
And how long should someone potentially plan to hold, according to the source's view?
They suggested a hold period of 3 to 5 years. The idea being you need to give the quantum market and D-Wave's place in it time to actually mature.
What about getting out? An exit strategy?
The report advises considering taking some profits if you see gains of 50% to 100%. Importantly, they recommend using a stop-loss order to limit potential downside, suggesting maybe around a 30% stop-loss level.
And based on all this, what was StockTelescope.com's price target for QBTS over the next 12 to 24 months from that report date?
Their target range was $25 to $35 per share.
Okay, which from that $18.62 price they cited represented a potential upside of roughly 35% to 88%. What did they base that target on?
The report seems to link that target to expectations that D-Wave would continue its revenue acceleration and that the overall quantum market would keep expanding, assuming, of course, that D-Wave executed effectively.
The analysis also laid out two distinct scenarios, a bull case and a bear case. What does the optimistic path look like, according to the source?
In their bull case scenario, quantum adoption happens faster than most people expect. D-Wave manages to carve out a dominant share, especially in optimization problems. Their QTS business really takes off, maybe hitting over $100 million in revenue with good margins, and maybe they even become an acquisition target for one of the big tech players. In that kind of outcome, the report suggested the stock could potentially reach $50 to $75 within 2 to 3 years.
And the flip side, the pessimistic bear case.
This scenario involves something they called a quantum winter, basically. Commercial adoption really disappoints. It's much slower than hoped. Maybe big tech competitors develop clearly superior solutions that steal market share. D-Wave's revenue growth stalls out, and the company keeps burning through cash without a clear path to stopping. In that downside scenario, the report suggested the stock could potentially fall back to the $5 to $10 range during a market correction.
Wow, those two scenarios really just underscore the huge range of possible outcomes and that speculative nature the source keeps emphasizing.
They absolutely do. It paints the high-risk, high-reward picture very starkly.
Okay, lastly, the source listed key catalysts that investors should watch for, things that can move the needle, and also key metrics to monitor. What were those near-term catalysts they identified?
For the next 6 to 12 months from the report date, they pointed to a few things. The general availability rollout of their Advantage 2 system, securing more of those large system sales contracts, continued growth in QCAS customer numbers and how much they're using the service, winning significant new customers, especially in key target industries like automotive, pharmaceuticals, finance, and announcing new strategic partnerships.
And looking out a bit further, medium-term catalysts say 1 to 3 years.
There, the report lists the potential launch of D-Wave's own gate model quantum system, which would be a big deal. Also demonstrating a clear and believable path towards profitability. The possibility of industry consolidation may be D-Wave becomes an acquisition target, the emergence of practical quantum AI applications running on their systems, and successful expansion into international markets.
And long-term factors looking maybe 3 to 5 years out that could create value.
According to the source, this really hinges on mainstream adoption of quantum computing becoming a reality. D-Wave establishing itself as a leader in the QCA platform space. Achieving significant revenue scale, they throw out a figure like $500 million plus as a benchmark. Securing major strategic partnerships or potentially being acquired, and continuing to innovate with next-generation systems to stay ahead technologically.
Got it. And finally, for someone who's taken this deep dive into the source material, what should they keep an eye on? What were the key monitoring metrics the report recommended?
The report suggested tracking revenue growth very closely, paying particular attention to the mix between the high-margin QCAs and those lumpier system sales. Monitoring customer metrics, both adding new customers and seeing usage grow among existing ones. Watching for technology milestones, new system rollouts, performance improvements, hitting roadmap targets. Keeping tabs on the competitive position, how is D-Wave stacking up against IBM, Google, startups, etc. And finally, tracking their financial progress, especially that path to profitability and their cash flow situation.
Okay, so to wrap up this deep dive then, we've basically walked through StockTelescope.com's investment thesis and strategic analysis of D-Wave Quantum as it looked back on June 7, 2025.
Yeah, we covered how they framed it as that high-risk pioneer play, looked at the key financial and operational data points they cited, discussed the significance they placed on that quantum supremacy breakthrough, and explored their view on D-Wave's technology, commercial traction, and real-world applications.
We also detailed the huge market opportunity and growth drivers the source identified, the positive financial momentum they highlighted, and maybe most importantly, the very significant risks and challenges that their analysis explicitly warned investors about.
And we covered the source's specific recommendation that speculative buy with strict risk management, along with their suggested strategy for handling the risk, and those contrasting bull and bear case scenarios.
And we absolutely have to say it one more time with total clarity because it's crucial.
Yeah.
This deep dive was only an analysis of the source material. It is absolutely not investment advice, and it is not financial advice.
That's right. The report itself contained that very stark warning about the high-risk, speculative nature of this specific stock and the real potential for significant loss.
It is absolutely essential that you conduct your own thorough research, your own due diligence, and consult with licensed financial advisors before making any investment decisions at all. We're simply aiming to provide a structured look at one specific perspective from one source on this company.
Right. And we really hope that this deep dive into StockTelescope.com's analysis gives you a clearer, maybe quicker understanding of at least one viewpoint on D-Wave Quantum, which is let's face it, a complex company operating in an even more complex and fast-moving market.
So here's maybe a final thought for you to chew on, something that really comes out of the core tension in this source material. You have these potentially world-changing exponential projections for the quantum market, and you have D-Wave, according to the source, with an early lead and some practical breakthroughs already demonstrated. How does that incredible potential for growth really balance against the very real risks that the analysis also highlighted specifically? That extreme valuation and the looming intense competition from tech giants who have vastly, vastly deeper pockets.
Hmm. Yeah, that's definitely the multi-billion-dollar question, isn't it? Something to think about.
Indeed. Well, thank you for joining us for this deep dive.